Hey traders, I want to go over in today's video the ATR study and why it's important right now in today's market. So I've been talking about volatility, and this is an implied volatility study down below, completely free on any platform. And then all I did was add an ATR study. So this is down below here, this line. Now the ATR is the average true range, okay? And this is going back to a 14-day period. So when volatility goes up, I think we all know by now that stocks have big moves up or down. When stocks go down, volatility really goes up, right? The demand for option prices soars, and therefore they become expensive. But also stocks start to have wild moves, wild swings. So to give you an example, on Facebook, back when the market was, we'll say, dandelions and roses, everything was clear, Facebook was having again, not moving much per day. Remember, it traded all the way up to 224. The implied volatility was about 25%, so very, very light. And the ATR was about $3.80 a day, meaning Facebook, during the average trading day, would move up or down about $3.80, okay? And because, again, volatility was low. But as volatility picked up, and we'll actually talk about today, which is Friday, 4/24, we see that volatility, yes, it's come down a little bit, but the ATR is still elevated, and the ATR is $8, about $8.05, meaning Facebook now moves up or down $8 a day, okay? So we went from almost $4 to now $8, meaning the price of Facebook stock now moves double what it did just a few months ago. That's something we really need to take into consideration in trading. It's not just Facebook. We can look at the SPY, which is now moving $10 a day compared to when it used to move $2.50 a day. Right? That's a huge move. So when you're trading, you really have to do this. So SPY will use it's about 4 times average. And Facebook was about 2 times average. So therefore, if you're normally trading, let's say 100 lot of options, you should be trading here in SPY. You should be trading a fraction of that. So we'll say four times less. So maybe you're trading 20 to 30 lots now in the SPY. In Facebook, let's say you're trading 100 contracts, maybe you're only trading 50 on it now or 40 on it now. You have to really put your position size now compared to what the ATR is on a stock. Now, you can find the ATR for any individual stock. You want to look at NVIDIA, $16 a move. That's incredible. So if you're used to using, let's say, tight stop losses, or if you're into options and you're like, whoa, the option's going against me, you really have to realize you have to widen those because the ATR stocks are moving greatly right now. It can work to your advantage, obviously, if you're right, but it can also work to your disadvantage if you're wrong. But you have to expect, let's say the market gaps up and you're having puts in NVIDIA. Well, you have to expect, hey, it has about a $16 range, right? So if it's like, oh, it's up $10, I'm going to get out. No, that's actually common right now. Use the ATR study on anything you're trading, any stock. And I think it will really, really help you gauge, especially in a time where the market is moving and where we're having such wild swings up or down. Use that ATR as a gauge. And what you can even do is say, all right, here's the QQQs. ATR, $7.50. If it goes from 210 to 217, that should be the top end of the range. If it goes down to 203, $7 lower, that's the bottom end of the range. Use that. As volatility expands, the ATR will expand in a stock. Remember to make notice of that too. And as you see, a name that I like trading, Facebook, but I also realize right now, $8 a day is a big, big move. And make sure you account for earnings because we're starting to see FANG stocks having earnings like Netflix did. Funny fact, Netflix didn't even move on earnings. When you're trading options, when you're trading stock, keep in mind, Netflix, very high ATR, $20 plus. Okay? Are you prepared for a $20 move in Netflix per day? Ask yourself that question before you get into a trade. And keep an eye on that ATR and implied volatility. These are key measurements that anyone can use in trading right now. Thanks, everyone. Lance Ippolito here. Shoot me an email, lance@thefutureofwealth.com anytime.